All right. I think we're live on Instagram. We should also be live on Facebook and on YouTube and on LinkedIn as well. So for those of you who are joining us, welcome. We are doing our monthly Q&A. And today we have a pretty special topic. We're going to be talking about summer 2025 recruiting. I know it's crazy. It's only September of 2023, and we're already here to talk about summer 2025 recruiting, which is more than a month away, obviously. And obviously it's not ideal, but the reason why we are talking about this is because RBC Capital Markets has already started their they've already opened up their summer 2025 application process. So if you go on their website, you will see over the last week to week and a half or so. If you go, if you go to the website over the last week or week and a half or so, they've already posted their application, right? So, that's the situation that we're in right now. Obviously, if you're currently a sophomore or you just started your sophomore year, meaning you are in the class of 2026, that would be highly relevant information for you. And the first thing that I want to lead with, if you are a sophomore and looking at this application thinking, what the heck, my sophomore year just started, why is the process already starting? Then the first thing that I want to say to you is don't freak out. Right. There is still time. Okay. The firm that opened their application, RBC, they do this every single year. Okay. They will open their application. They will always be the first to open their application. The reason being, they're a pretty good bank, but they're not perceived to be quite as prestigious or quite as good as some of the bulge bracket and elite boutique banks out there. And so I would say they're probably right on the border of being a top 25 bank, right? And so I think they want to try to get out there before all the bulge bracket and elite boutique banks go out and recruit people over them, right? And so basically the reason why the recruiting timeline moves up a little bit earlier every year in investment banking is because all these firms think that if they go a little bit earlier, then they'll be able to get the best talent over their competitors, which is not necessarily true, to be honest, because a lot of people, they probably don't even know that they want to do investment banking yet this early on. And then so you do miss out on candidates like that, right? However, that's just the way it is. It's been happening for at least the last 15 to 20 years, every single year, the timeline moves up a little bit earlier and there's nothing we can do to stop it. And so we just have to learn how to play the game the way it's played, right? Whatever the rules are, we have to play by those rules, right? So that's what we're going to be talking about today. If you're a sophomore and you're thinking wow, recruiting's already started, I don't know what the hell I'm doing. And you want some advice and some guidance on where you should go from here, then we're definitely going to spend time talking about that. If you are a junior and you are still recruiting for summer 2024 and you're seeing that firms are already starting to open up summer 2025 applications and you're like, what the heck, I'm not even done recruiting for summer 2024 yet. Does that mean it's game over and there's no more opportunities? We could talk about that too, but the quick answer is no, summer 2024 recruiting is not over. However, it is getting into, probably the bottom third of the innings. If there's a nine innings in a baseball game, to use an analogy, we're probably in the 6th or 7th inning. Okay. So all the elite boutiques and most, if not all, the bulge bracket banks are pretty much done hiring right now at this point for summer 2024. But there are still middle market and lower middle market and even regional boutique investment banks who are still recruiting, right? What else? If you're a senior, if you're a class of 2024, and you're still recruiting, then that either means you did a summer internship, but you didn't get a return offer, which happened a lot this year, or if you are maybe you did do you did a summer internship, you didn't get a return offer, or you didn't do a summer internship and you're starting the process very late. Maybe you just discovered you wanted to do investment banking as a senior in college. But either way, if you're in one of those two scenarios, then you're probably looking to recruit for a full-time offer right now. There are some nuances between full-time recruiting versus summer internship recruiting. And so if you have questions about that, we can definitely talk about that as well. And so that's pretty much it. So, that's kind of the context for what we're going to be talking about today. Now, I see there are people live right now on Instagram, on YouTube, on LinkedIn. And so if you guys have questions about any of these topics that I just talked about, feel free to start dropping your comments down in the comment section, or drop your questions in the comment section, and let's build up a queue of questions. And I'm going to spend the next 50 minutes or so answering your questions, just answering as many questions as we can. Typically, we do this once a month, and because I spend most of my time coaching the students that are already in our program in Wall Street Management working with us. So I don't have a lot of time outside of that, but I do want to also still continue to give back to the people that are not in the program yet. And so that's what this call is for. So make sure you take advantage of this. I'm just here to give you as much free advice as possible. I'm not holding anything back. And at this point, for those of you who are new and maybe not familiar with us, first of all, my name is Sam Shaw, and I'm the founder and head coach at Wall Street Mastermind. And we've been around for almost 6 years at this point. We've coached just around 1,100 students at this point through the investment banking recruiting process during that time. And so we've just accumulated a lot of knowledge and expertise on how the investment banking recruiting process works. Something that's pretty exciting for our program is that in recent months, we've also been adding to the bench depth on our coaching team. So we just recently hired 2 new coaches who both used to be the global head of recruiting at 3 different bulge bracket banks between the 2 of them. They've also worked between the 2 of them, they've also worked at other firms like McKinsey, like Bridgewater, like BlackRock, like D.E. Shaw, like Point72. Like they led the recruiting functions. And when I say lead the recruiting functions, they led both campus recruiting as well as lateral recruiting, which means if you're already graduated, but you're trying to lateral into investment banking. And so those are very exciting hires for us, because these are the people that literally have spent the last 2 to 3 decades working at all the top institutions on Wall Street. And they're the ones that were responsible for designing their recruiting processes from the ground up, right? And so I know that recruiting for, high finance jobs can be a very, can feel like a black box a lot of times, because you don't know what's going on, and you don't know what these firms are looking for, what they're thinking, what do they actually want to hear when they're interviewing you. You have all sorts of questions that you are curious about, but you don't know where to go get the answers from, right? And so the reason why we were really excited about hiring them is now you get to hear exactly the exact answers to all the questions you have directly from the source, right? There's no one that's more knowledgeable than these individuals in terms of, what these firms are looking for. So I've been learning from them as well myself, even though I've coached over 1,100 students, but I'm constantly learning, and it's just been a pleasure to have them on the team. And so as much as possible, if you guys, there are things that you guys want to know that I've learned from them, I'm happy to share that with you as well in my responses to your questions. So aside from that, while I'll give you guys maybe another 30 to 60 seconds to drop your questions down in the comments so that we can build up this queue. But, for those of you that are, curious, how we differ from everyone else, part of it is the track record that we talked about, right? We are pretty much the first program of our kind that kind of pioneered this high touch coaching model and applied it to investment banking recruiting, at least here in the States. Okay. There are other people that have tried to copy us over the years, and more and more so now that they see how successful we've been, but we have the longest track record. Like I said, we've coached the most clients, over 1,100 students, and there's a lot to be said for having that experience, because you've seen all sorts of different scenarios. We have the best and most qualified coaches. I already talked about that. We're the first company of our kind to start offering money back guarantees for people who work with us and don't get jobs. We now recently did this earlier this year, we also launched kind of like a financial aid option, because a lot of times, like one of the reasons why people really want to work with us but can't is because sometimes like not everyone can afford to work with us, because it's a very high touch model and it's very expensive, right? Or not very expensive, but like it's very high touch model. And so like, it does take like a lot of time. And also like, if you think about the quality of the coaches that we have, like it's not cheap to hire the global head of recruiting at, top bulge bracket banks, right? Usually these are people that you can't even get access to. So it's a great investment, but nonetheless, not everyone can afford it. So we now have financial aid options. Because we never want money to be the only reason why someone can't work with us, because we know that if you work with us, we're going to get you a great ROI in the form of a six-figure job, so that for the rest of your career, you will never make less than, let's say $150,000 to $200,000 for the rest of your life, right? Because that's basically the starting pay for a first-year analyst, right? So that's kind of a little bit about us. But with that said, like, let's dive into, let's see what questions we have in the comment section. All right. I'm going to start with the Instagram folks. All right. So just scrolling to the questions right now. Yana Masi got an offer. Congratulations. Hat Boy got an offer from JPM. Congrats. That's a great offer. Let's see if there are any questions. Will there be a recording available for this live? Yes. Okay, people are kind of having a conversation here. Please give me some prep structuring plan weekly for technical prep and everything for junior summer recruiting. I'm a first semester sophomore and non-target. Okay, so this is kind of like the first real question that I'm seeing here. So let me kind of talk about this a little bit. So as far as technical prep goes, first of all, you have to understand like what do you need to learn, right? And then also when it comes to technical interviews, the order of operations is very important. So you have your accounting and the 3 financial statements, which is kind of the foundational layer. I kind of think of it as like a pyramid structure, right? You want to start from the bottom. And I also use a pyramid because like the questions that are closer to the bottom are the most likely to show up. And then the questions that are near the top of the pyramid are the least likely to show up, but they're also the most advanced and they are the like hardest to get to, so to speak, right? Or hardest to understand. And so if you think about it as a pyramid structure, at the bottom, there's accounting and there's 3 financial statements. So that's like understanding what an income statement is, understand what a balance sheet is, understand what a cash flow statement is, understand how all 3 of these statements link together, meaning like if certain things happen in a business, like if I give you any random type of business transaction, like what happens to each of the 3 statements. So that's like level number 1, right? Once you learn that, then level number 2 on the pyramid would be valuation methodologies, right? So valuation methodologies, for those of you who are beginners and you have no idea what I'm talking about, basically you have to learn how to assign a value to a business. Like, what is this company worth, right? Like, why is it that Apple is the most valuable company in the world today? And why is Microsoft the second most valuable? Like, why is Apple worth a little bit more than Microsoft? And how do you come up with that valuation, right? How do you come up with the price per share for, any stock that you're looking at, or even for private companies, right? So valuation methodologies, like it's at the core of everything you do in investment banking, because fundamentally you're doing one of 2 things in investment banking. You're advising companies either on the buying and selling of businesses, or you are helping them raise capital, right? And a lot of times if you raise capital, you can either do that through borrowing money, which is debt, but a lot of times you also do that by raising equity, which means you sell a percentage of your business in exchange for the investor's money. And in that case, like you need to know what your company is worth so that you know like what that exchange of value should be with your investors, right? So valuation, very, very important. The main valuation methodologies you need to know are trading comparables or public comparables. There's different names for it, but they mean the same thing. Precedent transactions or M&A comps. And then you also need, you need to know discounted cash flows. Those are like the 3 primary valuation methodologies that you need to know. There are others as well. And some people will tell you like a leverage buyout is a valuation methodology, which technically they're not wrong. But like I would say those are the 3 main ones. Okay, so that's level number 2. Once you learn valuation, then you have the third level, which is, I would say M&A math. So this is like when a company buys another company and you're going to combine the two companies, like how do you calculate what their financial statements will look like on a pro forma basis? Pro forma just means like, you take one old company and a second old company and you combine them into a new company. Like, what does that new company look like? Right. And does that new company become more profitable or less profitable compared to, when they were just a standalone company? When they acquire, it was just a standalone company. And so usually they measure this based on like an earnings per share metric. And so like your earnings per share as a standalone company was $1 per share. And now you buy this new company and your earning per share goes up to $2 per share, then you become more profitable, which is in finance terms, they say that's an accretive transaction, right? If the opposite happens and your earnings per share goes down, then that's dilutive because your earnings per share actually decline, right? And so like understanding all the inputs that go into this accretion dilution math and knowing how to make all the calculations in an interview setting, that would be like kind of the level number 3. And then level number 4 would be leverage buyouts, which I mentioned earlier. Some people consider that to be kind of like the 4th valuation methodology. But what LBOs is another form of acquisitions, but it's when the buyer is actually a private equity firm and not a just a strategic buyer, which is like if one company is buying another company, that's a strategic acquirer, right? If you have a private equity firm buying a company, that's a financial buyer, right? And so financial buyers, what private equity firms will do is they will not only acquire a business, but they will also use debt in the acquisition. Okay. So the easiest analogy that I can use for you to understand this is like, if you're a real estate investor, you might go out and buy investment property to generate a return on it. And when you buy the investment property, let's say it's $100,000. Instead of paying $100,000 for the house with your own money, you will probably take out a mortgage to pay for 80% of it. So you'll take out $80,000 mortgage, and then you'll pay the other $20,000 out of pocket, right? And then over time, and then you'll rent the house out, and then your tenants will pay you rent every single month, and then you also have some other expenses to like operate the investment property. Like you got to pay your property manager, you have to pay for maintenance and repairs, you have to pay property taxes, you have to pay for property insurance. There's like different expenses that you have to subtract out of the rent that you're collecting, and then there's like your free cash flow at the end of all that, which is like, here's what I get to keep. And instead of keeping that money, you're going to take that free cash flow and make the debt repayments to pay down the debt that you owe the bank, so that eventually you own the entire property, right? And then like when you do pay off the debt and you own the entire property, now you own a property that's worth $100,000, but you only pay $20,000 out of pocket. So that's like how you're making money. And then the other thing you can do is the property value might also go up over time, right? Because real estate typically appreciates in a normal market. And then so there's a second way for you to make money. And then last but not least, you can also improve the property by remodeling it or making it better, making it more valuable. And so like there's multiple ways to make money in this model, right? And so private equity firms, they take kind of like the similar model, and then they apply that to the acquisition of businesses and companies, as opposed to just like the acquisition of like a property, right? And so that's what leverage buyouts is at a very high level, like 30,000 foot level. So that's like kind of the 4th level of that pyramid, right? So we just went through all 4 levels. So again, to recap, it's accounting, it's valuation, it's M&A, and it's LBOs. And as I mentioned earlier, like it's really important for you to follow the correct order of operations, which is the order that I just laid out. Because like if you don't understand level 1, if you don't understand accounting, it's going to be very hard for you to understand valuation, because valuation requires you to understand like the different metrics on the income statement and the balance sheet, and sometimes even the cash flow statement, okay, depending on what multiple you're using to value the business, right? And then like if you don't understand valuation, which is level 2, it's very hard for you to make sense of M&A, because in M&A, when you're buying or selling a business, the first assumption or the first input that you need is how much is this business worth? How much are we going to pay for this business? And so that requires you to perform a valuation analysis, right? So, and then like without understanding M&A, like it's hard to understand LBOs, because LBOs is just like a more complex form of M&A, really. Like you're still acquiring a business, but like I said, it's with a more complex capital structure where you actually have to use debt, and you have to like pay down the debt. And there's all these different types of debt that you can use with different interest rates, different terms, so on and so forth. And so like all these concepts kind of build on top of each other. So you want to start at the base level, and then as you learn each of these concepts, then it becomes you can move on to like the more and more advanced topics. Okay, so that's like a high level structure, right, for technical prep in terms of like how I would go about it. In terms of like structuring this out into like a weekly plan for you, Ishrak, like I don't know what your schedule looks like, right? I think in terms of like a study plan, my only advice for you and everyone else on this call is that at a high level, you first have to figure out like how much time do you have each week to dedicate to studying your technicals, right? And so learning technicals is not the only thing you're going to have to do to be successful in the investment banking recruiting process, right? In fact, the reason why investment banking recruiting is hard is not just because of those technical interviews. That is one part of it. That's one piece of the puzzle. But the reason why most people feel like it's very, very difficult is because not only do you have to learn the technicals, you also have to continue to do well in school because you're a full-time student, right? So you got to keep your GPA up, which is a full-time job in and of itself for a lot of people. You also have to network with a lot of bankers. Like most of our students, they will probably have networking calls with at least hundreds of bankers throughout their recruiting process. So that's very time consuming. It's not just the time spent on the calls, it's also the time spent reaching out to bankers, getting them to talk to you, so on and so forth, right? So networking as a whole takes up a good amount of time. Then in addition to the technicals, you also have to learn your behavioral interviews or prep for your behavioral interviews. You have to prep for like all the stories that you want to use. You have to learn how to walk through your resume in a coherent manner. You have to have good answers prepared for common questions like why you want to do investment banking, why are you interested in this bank specifically. There's market related questions. So there's a bunch of different things you have to prepare for. And on top of all that, you also have to spend time building up your resume, right? So like the most competitive candidates that we see these days, probably by the time they have to start applying. So like, for example, if you are a sophomore right now and you're going to, you're planning on applying for a summer 2025 internship, by the time those applications open, which aside from RBC, like we expect the rest of the applications probably to start opening up in another 2 months or so, probably by like November or maybe December, November to December-ish is kind of like our best educated guess based on what's happened in recent years. Prior to that, the most competitive candidates will already have stacked usually upwards of 3 relevant internships on their resume. And so when I say 3 relevant internships, like it's not just like any kind of internships, but like ideally, like the things that I would consider to be relevant are like if you intern at a smaller investment bank, that will obviously be the most relevant. If you intern at a private equity firm, that can still be very relevant. Some people do corporate development internships. Some people work at search funds. If you can't get like something that's transactional in nature, like the stuff that I just listed, you could also consider something that touches on a lot of valuation work, because we just talked about why valuation is relevant, right? So if you worked at a valuation firm, equity research internship, if you worked at any type of investment firm where you had to actually like analyze individual companies and individual stocks and assign a price target to that company or to that stock, then I would say that could be spun into relevant experience as well. But long story short, like you also need to get probably ideally 2 to 3 of these internships onto your resume before you have to start applying. And each of these internships usually take, I would say you have to stay there for probably 2 to 3 months, right? And that's just like how long you stay there. There's also lead time leading up to that where you have to like actually go out and apply and interview and network and try to get the offer in the first place. And so like all this is to say, there's a lot of stuff that you're gonna have to be juggling on your plate simultaneously. So when you say like come up with the weekly plan for technical prep, like we can't help you with that. Like if we know you better, and like for example, if you're in our program, you're working with us, this is the type of stuff that we would put together for you. But barring that, like without knowing more about you, what I would say is figure out like how much time you have each week, right? And if you're getting close to recruiting, my advice to you is, aside from like schoolwork, which obviously you have to do that to like maintain your grades and to keep your GPA as high as possible so that you're still a viable candidate. But outside of that, you should be prioritizing recruiting above almost everything else you're doing. And I know that sounds extreme, but to be honest, like recruiting is just so competitive and it's something that's so consequential. It's going to affect you for a very, very long time, right? Like what your first job is doesn't just affect like the first couple of years of your career. It affects the rest of your career. The next 20, 30, 40 years, depending on how long you're going to be working, like the entire trajectory of your career, what kind of exit opportunities you're going to have, how much money you're going to be able to make every single year. Like every raise you get is going to be anchored off of like whatever you were making in your prior job, right? So like the more money you can make in the beginning, like the more you're going to make in all of your successive jobs, right? And so there's enough at stake and there's so much on the line that you want to make, if you're taking a long-term view to this, you want to make some near-term sacrifices. You might have to see your friends a little bit less. You might have to sleep a little bit less. You might have to like just not have as much fun for the next semester or two, depending on how long you're going to be recruiting for. And just kind of enter, you know, what one of my mentors calls like a season of no, where you're just like saying no to people, saying no to things that you have to deprioritize in the near term. And then once you made those sacrifices, the sooner you can get this job, sooner you can go back to just kind of like living your normal life, right? And that's kind of like the way life works, unfortunately. Like nothing good comes easy, right? And so you have to be willing to make some sacrifices if you want to, you know, kind of live like an extraordinary life or make extraordinary money and more than like what other people are going to, or your friends or your peers or your family or whatever are going to be making in the future, right? Because otherwise, if you're only willing to do things that other people are also willing to do, you're not willing to make any sacrifices, then by definition, you're going to turn out pretty average, right? So anyway, I went on a tangent there, but as far as weekly plan goes, figure out how much time you have, prioritize as much of it as you can to recruiting. And then even amongst that block of time that you're dedicating to recruiting each week, like if you say, I have 20 hours a week to dedicate to recruiting, how much of that is going to networking? How much of that is going to your internships? How much of that is going to behavioral prep? How much of that is going to technical prep? Like that's kind of like how you have to think about it and break it down. And you also have to like work backwards, like how long is it until recruiting starts, right? And then some of these things that you have to do, like it's more urgent than some of the other things, right? Like there's an order of operations. Like for example, building up your resume is probably like the first thing that I would be doing because that's like the longest lead time item, right? And then networking is probably the second thing that I would be doing after, you know, I've gotten enough relevant experience, right? And then the third thing that I would be doing is the behavioral prep. And then typically I don't do the technical prep until like the very end. Like that's the last thing because the behavioral prep will affect all of your networking conversations. And so that has to come earlier because you're going to be networking throughout this entire time. But the technical prep, I'm not saying it never happens. Every now and then, like someone might ask you technical questions during your networking conversation, but in our experience, more often than not, like you're not going to need to know your technicals until you actually like walk into the interview. So that's why like from a lead time standpoint, like you have the most time to learn your technicals. And so like, that's why I kind of like usually save that for last. Okay. So that's kind of like as detailed as I can go without knowing more about your situation. So, hopefully that helps. All right, Ishraq, if you have follow-up questions, feel free to ask. Thoughts on diversity programs for summer 2024. Yeah, I mean, like, I'm not sure what you mean by thoughts on it. Maybe you can be more specific, FJ, but in general, like diversity programs, what I have to say about it is if you qualify for diversity programs, then you should absolutely do it, right? Because it's going to be a lot easier for you to break in if you can get into a diversity program. Typically for most firms, like diversity programs are for people who are at either Black, Hispanic, or Native American, right? That's like ethnically diverse and by their definition. Or you can be gender diverse. So if you're LGBTQ or if you're female, you can be, what else? They have diversity programs for people with disabilities. And this doesn't mean like, you know, your arm is amputated or whatever necessarily. Like it could also just be like you have a learning disorder or you have a learning disability, ADHD or, you know, whatever, right? What else? If you are a veteran, so if you served in the military, they have programs for that. And then like a more rare one that not every firm has, like the first four that I listed, most firms will have those. And then there's another one that's like if you're like a first gen college student, meaning you're the first person in your family to go to college, some firms will consider that to be diversity as well. So if you fall in any of those categories, then you should absolutely look into all the firms and whether they have like diversity programs for someone like you, right? And usually it's the bigger firms that will have programs like this. So it's either like a bulge bracket bank or an elite boutique bank or a middle market bank. So like basically like the top 50 banks that are out there, right? So I would start there. And if you go to their career pages, almost every single one is going to have a section or a sub page that's dedicated to their diversity initiatives. So that's kind of like the page I would keep tabs on. Also, the other thing to note is like usually diversity programs are for people that are starting early, right? So like if you're in undergrad, the diversity programs are usually like, they'll usually take place either during freshman summer or sophomore summer. So like you usually have to apply as a freshman or a sophomore. Like if you're already a junior or senior, like it's too late, right? If you are an MBA, like you're in business school, then typically the diversity programs will happen, I believe actually like right before you start your first year. Okay, because like the regular recruiting happens during the first semester of your first year in business school. And so you also have to be aware of the timing to know like if you're too late, then unfortunately you're gonna have to skip the diversity processes and just go through the normal processes. But if you can't get into the diversity processes, that's always the best way to go, because what will happen is they'll give you a freshman summer internship or a sophomore summer internship. And then as long as you do well there, that will convert into a return offer for a junior summer internship. So then like you might not even have to recruit for junior summer, which is really, really nice. And the competition is like, competition level is way lower. Okay. So that's my thoughts on diversity. But again, if you have more specific questions around that, feel free to ask. All right. Okay. What advice do you have for non-target students with limited alumni networking opportunities? So Parker, this is a very common thing that we deal with, because like here in Wall Street Mastermind, I would say about 45% of our students, well, let me think about this. Yeah, 45% of our students go to target schools, 20% of our students go to semi-target schools, and then 35% or over 1 in 3 students go to non-target schools, at least the last time I looked at this, okay? And so that's a pretty significant percentage of the students that we work with. And so most non-target students do not have a lot of alumni that they can reach out to when it comes to a networking standpoint. However, what you have to understand is that you are not limited to just your alumni when it comes to networking. Like, I don't know at what point people started getting this idea that you can only network with someone if they are an alumni from your school. That's not true at all, right? So it is true that if someone did go to your school, they're probably going to be more likely to be willing to help you, right? Because you guys have something in common, right? But like that principle can apply to anything, right? Like you could find bankers that have other things in common with you, right? Maybe there's people that are from your high school. Maybe there's people that are from your hometown. If you're from another country, maybe there's people that are also from that same country as you. If you are I don't know, female, then maybe you reach out to female bankers. There's like, you like get creative and think outside the box about like, what other attributes can I use to create like similarities or commonalities, right? Maybe you are in a certain frat at your school and there are bankers that were in the same frat, but a different chapter at a different school, right? Or maybe you guys were in the same club, but just different chapters. Like there's all these different things, right? Maybe you're a student athlete. Maybe you play basketball for your school and then you see that this other banker also played basketball back when they were in college at their school, right? And so don't limit yourself to just the alumni of your school. That's the first thing, right? Try to find commonalities in other forms. It doesn't have to just be the same school. And then like once you've exhausted all of those types of leads, then like there's also just reaching out to like cold contacts that you don't have anything in common with, at least like not anything that's, you know, publicly available information online, like nothing that you know about, right? Like you can do, not even can, you should be doing cold outreach to bankers that you don't know at all. Like by definition, if you're doing enough networking, if you're networking at scale, and like I said earlier, like most of our students, like they end up networking with hundreds of bankers usually throughout their process, not like 100, but like multiple hundreds, right? We even have students that have reached out to thousands of bankers, believe it or not, right? But to be able to network at that level, at that scale, like you are going to run out of like just your warm contacts. Like that's usually not going to be enough, right? So most people, if they're doing networking the right way, they're going to have to go and network with complete strangers, and that's okay, right? Like I know it's intimidating, and you might not know how to do it, but that's what you're gonna have to do, right? And so, um, and like like the cold contacts, like believe it or not, there are still people there that are gonna be willing to help you. Like your overall conversion rate is probably gonna be lower, your response rate is probably gonna be lower, and then like your referral rate is probably gonna be lower, and so you just have to make up for that with volume, right? But at the end of the day, it's like the more important thing is not like, oh, what percentage of the people I reached out to actually ended up helping me. It's how many people in absolute terms ended up helping me. How many referrals did I get? How many firms do I have referrals at? Right. And so not going to sugarcoat this. Like if you're a non-target student and you're trying to network, you're probably going to have to work harder than your friends who go to target schools. Like you're going to have to talk to more people just to get to the same number of referrals, right? And before you talk to more people, like you're also probably going to have to reach out to more people just to get like one person to respond. So like all of this compounds, right, at every level. So there's just going to be more work. So you have to start earlier. You have to work harder. You have to be more efficient. You have to have better systems and better processes. You have to automate and delegate as much of your networking process as possible, which is also something that we help our students with inside of our program. But like, those are the kind of things I would be thinking about, right? And then like the last thing I will say is one difference between networking at the target school level and the non-target school level is that if you're a target school student and you're networking, typically there's going to be like a school specific recruiting team for your school. So like if you go to UPenn or Wharton or Harvard or I don't know, like Dartmouth, there's going to be a school specific recruiting team for your school that consists of a handful of alumni from your school across like various seniority levels, from like analysts all the way up to MDs. And they're basically the people who are responsible for screening all the applications from your school and deciding who the best candidates are that the firm should interview. So like those people have an enormous amount of power, right? If you go to a target school, you need to figure out who those people are, and you need to make sure that you get in front of them and talk to them, and then make sure that you knock that conversation out of the park and make a great impression. Okay. That's if you go to a target school. If you go to a non-target school, you're not going to have something like that. Okay. So you're not going to have like a school specific recruiting team helping you out. And so in that situation, I would say like you have to change the mix, the seniority mix of people that you network with a little bit, because a lot of people, they make the mistake of like mostly, if not like only networking with like the very junior level people, either analysts or like sometimes up to associates, because I think people find the more junior folks to be less intimidating. They find them to be more accessible. They are closer to you in age and maybe easier to talk to because you have more in common. And so they just like only exclusively reach out to those people. Like in my experience, most junior bankers, especially at the analyst level, they don't have any influence in terms of over like who actually gets interviews and who doesn't, unless they are on the school recruiting team for their target school, right? And so like, if you don't go to a target school and you're only talking to analysts, like whatever analyst you're talking to, like they're not going to be able to help you most likely. Like, I mean, they can help you as like give you some advice, but honestly, most of the advice that you get in a very short 20 to 30 minute conversation is going to be very surface level and very shallow and not super actionable 99% of the time, right? So really, when I say help you, like what you're really looking for is like you want someone who's going to be willing and able to go and like pull strings for you behind the scenes and get you that interview, right? Or put you in front of the wrong people, or put you in front of the right people, or just like put, select your resume and like put it in the stack that's the yes pile, right? Like the pile that of people that they're actually going to interview. And most junior people can't do that. So if you're a non-target school student, like I would be focusing on the more senior folks, which is defined as like anyone that's VP and above. So if they're VP, they're director, they're managing director, they're going to have a lot more say, have a lot more influence, right? And so they're going to be more willing to help you out. And then like, there's obviously not a lot of alumni from your school specifically, but you can broaden that, right? Like when I think commonality, it doesn't have to be like, oh, I went to this non-target school and someone else also went to the exact non-target school. I could also broaden that one level up and say, I'm just going to talk to other bankers that went to non-target schools also. And there's a bunch of non-target schools out there, right? So if you like lump all the non-target schools out there together and aggregate it into one, there's probably just as many people you can reach out to as like any target school out there, right? And like the commonality that you're going to use to build rapport is that just that, hey, they broke into investment banking as a non-target candidate themselves. That's something that you're trying to do now. And so you would love to just talk to them and get their advice on how they were able to accomplish that, right? And so those are some like tips and advice for you that in terms of like, some of the adjustments that I would make if you're a non-target school student and you're trying to recruit. But ultimately, at the end of the day, what it's going to come down to if you're a non-target school student and you don't want to spend like way more time than other people is that your conversion rate is going to have to be better, right? So like your outreach email is going to have to be better. Your targeting is going to have to be better. Your email subject line is going to have to be better. Your follow-up game is going to have to be better. Like if people don't respond to you initially, how do you follow up and get them to respond in the second try or the third try, right? The way you have that actual conversation itself has to be better, right? Like if you're better at having those conversations, you're more likable, you're more impressive, you get more people to want to refer you, then like you can talk to fewer people and still get the same number of referrals, right? And so that's the kind of stuff that you have to do to kind of offset the handicap that you have of not having a lower conversion rate because you don't go to the same school as the other person. Okay. And if you need help with any of that stuff, like again, that's something that we're very good at, and we're happy to help you with that and just give you advice on how to do that, how to kind of do all that. But like, there's probably like more than 10 hours worth of training that go behind everything I just said in terms of like your conversion rate optimization. And so obviously like we don't have enough time on this call specifically to cover all of that. All right. Let's see here. Next question. There's an obvious funnel in IB from analyst to MD. Where do all of the people who don't make it to MD go? How do their salaries compare to people who do make it to MD level? Yeah, it's a good question. So the reality is vast majority of people don't stay in banking for the long run. So if you, again, think of the hierarchy in banking as kind of like a pyramid structure, then at the bottom level, there's like analysts, and there's the most analysts, right? Then the next level above that is associates, and there's less associates than the analysts. And then at the level above associates, there's VPs, and there's less VPs than associates. Then there's less directors than VPs, and then there's less managing directors than directors, right? And so at each level, there are people that just quit on their own and go outside of banking and into other jobs. Like that's why people talk about exit opportunities so much, is because a lot of people don't plan on staying in banking long run. And so like they'll go to private equity, they'll go to hedge funds, they'll go to venture capital, they go to growth equity, they can go work for a tech company, they can go work in strategic finance, corporate development. There's a lot of different paths that you can go to. And so a lot of people do that. I would say the vast majority of people actually do that. They leave banking and go work elsewhere. Okay. Some people want to stay in banking, but they don't get promoted because they didn't perform well enough. Although I find that usually it's not that hard to get promoted in banking, especially in the earlier levels, because by definition, like most people are leaving by default. And so like, if you're just like one of the few people that wants to stay, it's almost just like by default, you're going to be someone that gets promoted. Right. But like, if you make it to MD, I mean, there's a compensation report, like investment banking salary survey data that was done by Liquidity. So you can look that up. Just search like Liquidity compensation report. And he actually has a lot of pretty granular data going from like how much the average pay is for different types of banks, like bulge bracket, elite, boutique, middle market, going from analyst to associate to VP to directors to MDs. I think at like the MD level, like you can basically make $750,000 a year and up. Like if you're really, depending on how good you are and how much business you're bringing in, right? Like some MDs make 7 figures, right? You can make over $1 million a year. Some MDs, like if they're really, really, really good, they can make multiple $1 million a year, right? And so obviously that's like the top 0.01%, and like the vast majority of people don't get to that level, but that's very, very high pay, right? So when you say like, if you don't make it to the MD level, like how is your pay going to compare to that? For most people, like your pay is going to be lower, right? If you go into other career paths, like your pay is probably going to be lower. Maybe not if you go to the buy side, because the pay on the buy side is really good too. So like if you're working still in an investing role, like private equity, hedge funds, venture capital, growth equity, like I said, you can still make banking like money. And also you can still make 7 figures at the senior level. Otherwise, if you want to make that type of money, you're either going to have to become like a very senior level executive at some very large companies. Like if you're at a public company and you're like director level and up, you could be making 7 figures, right? Again, that's not easy to do either. Or you probably will have to start your own business, right? And like even if it's a small business, you don't have to like raise venture capital and go public or whatever. But like even if you start a small business, there are many small businesses out there that pull in 7 figures a year. Some that pull in 8 figures a year, right? Although arguably, if they're pulling in 8 figures a year, they might not really be considered a small business anymore. But just know that like revenue is not equal to profit, right? Like if you own the business, if you own 100% of business, you don't have any investors, you don't have to share any of your profits. Then even if you pull in 7 figures a year in revenue, you still have to pay for all the overhead. You have to pay your employee salaries. You have to pay for rent. You have to pay for inventory. You have to pay for a lot of stuff. And so that's not necessarily going to be your take home pay. But if you're making can your business be pulling in $3 million in top line revenue for you to make $1 million in like bottom line profit? Yeah, absolutely. Like totally possible. Right. So there are ways to like make kind of like that managing director level pay without having to like sacrifice your work-life balance and your lifestyle for like the next 10, 15 years of your career, because that's basically what you're going to have to do if you want to stick it out in banking for that long and make it to that level. But none of those options are going to be like easy by any means, right? Like, because you're talking about becoming like a top 0.1% earner in the entire world. And so by definition, that's not going to be easy, right? So hopefully that answers that question. Does FIG IB really pigeonhole you? Like some people say, unlike banking / insurance valuation, isn't the wealth / asset management / fintech modeling akin to that of widget companies? I think there's still depends, right? Like fintech companies, I think, yeah, it can be closer to probably like your standard tech companies or even like a widget company. For wealth and asset management, first of all, I'm not a FIG banker, so like, don't quote me on this. I'm not a FIG expert, right? But like for wealth and asset management, I think just like the revenue, the business model and the revenue and how you forecast revenue and top line is going to be different, right? Like it's usually off of assets under management, and then you usually take, a management fee that might be around 2%. Plus sometimes you get carried interest, which is like profit sharing for any profits you generate, which sometimes could be up to like 20%, right? And then so like the revenue line is going to be different. And then like beyond the revenue line, then like I feel like, yeah, the expense line items are going to be pretty similar, right? I think for banking and insurance, the reason why it's different is because like cash is not really truly cash, right? Like people deposit cash with you at the bank, like that's earning interest, which is generating revenue for you, because you can then loan it out to other people. And so it's just a different model. It can pigeonhole you a little bit, but I also don't want to make it sound like if you do FIG banking, then like you're not going to be able to do anything else. Like I've definitely seen people do FIG and then like lateral out and go do other things that are outside of FIG. And so it's definitely possible. But yeah, like no matter what, if you cover a certain industry when you're in banking, you're going to be a lot more likely to end up going down like something related to that industry later on in your career. So like I started out in tech banking, and then when I went in private equity, I was still doing tech investing in tech companies, specifically data centers. And then after I left private equity, I decided to stay in tech and go work for other tech companies. Like first it was Square, and then it was GitHub, and then later like a third company called Enjoy Technology, right? So because that's just what I knew. That was the business model that I was the most familiar with and that I could add the most value for, right? And so like that's probably what people mean by pigeonhole, but it doesn't mean that you have to do that, but it just means that it's becomes like the most likely path for you. Okay. Let's keep going. Hassan says, I'm DMing and nobody's answering me. Hassan, I'm sorry about that. We have a lot of DMs, and so we will make sure to get back to you as quickly as we can, but just be a little bit patient with us. All right. And we'll try our best to get back to you in a timely manner. How do I get in contact with you guys? Yeah, I mean, DMing us is a good way to go about it. You can DM us on Instagram. You can DM us on LinkedIn, on my LinkedIn profile. You can also just go to our website and just like, if you want to talk to our team, you can just book a call with us, or I can give you a URL right now. It's www.wallstreetmastermind.com/apply. Okay. And the street is abbreviated to ST. So it's wallstmastermind.com/apply. Okay. Those are probably like the 3 best ways to just kind of get in touch with us. Let me see what else there is. Where can we get the recording? Would you email us? This recording, you're going to be able to find it both on our YouTube channel. You can just Google, when you go on YouTube, just search for Wall Street Mastermind and it should come up. It'll also be, should also be on our Instagram page as well. So if you're already on Instagram right now and you want to stay on Instagram, then just make sure to follow our page, and then you can always go back to it. And there's a bunch of old recordings as well for these monthly Q&As that I did in prior months. All right. Let's see what else. A bit late here. Sam, any names to recruiting interns for summer 2024? Yeah, so this is a very common question for people that are like still recruiting and are late in the process. So like, I can tell you like who's not recruiting anymore. So pretty much all the elite boutiques are done. And then pretty much most, if not all, the bulge bracket banks are done, right? So if you're still in the process now, like I probably wouldn't spend too much, if any, time on those 2 categories. All the banks that are recruiting now are going to be like middle market, or, you know, potentially even lower middle market / regional boutique firms. And the reason why I can't give you like exact firms or names of exact firms is that these firms, they don't really like publicly announce when they're done with recruiting. And the reason is, one, for competitive reasons, like they don't need their competitors knowing where they're at in the recruiting process. 2, a lot of times like people will renege on offers. So even if they've given out offers and let's say they're done for now, a lot of times their headcount targets will change. Like if someone reneges on their offer and goes to another firm, they keep a lot of people on the wait list. And then they'll like just start to move down their wait list and give like backup offers, right? But so that like they don't want to announce prematurely that they're done with recruiting, and then people just kind of like give up on them or forget about them, right? The other thing too also is like sometimes headcount targets can also change because the environment changed. So like, for example, right now, a lot of banks are cutting back on hiring and they're hiring less people. But like, let's say if the market recovers in 3 months or in 6 months or whatever, like before the summer starts, they might decide that, oh, actually we need more interest than we thought. And then so they might open things back up again. So like, unfortunately, like what you're going to have to do is you're going to have to like network with people at all these firms. And then like every single conversation you have, make sure one of the questions that you ask them is, where are you guys currently on the recruiting process? And just ask them, right? Like go directly to the horse's mouth and get the information from the source. And also, you can also like reach out to people that are actually recruiters at these firms. Like if you go on LinkedIn and look for like people that are in charge of campus recruiting, usually their title will say something around campus recruiting or campus recruiter, specifically for investment banking. Then you can reach out to them and ask them like, because this is a more logistical type of question, right? And sometimes a lot of bankers might not know the answer, but a recruiter should definitely know the answer to this. Okay, so that's what I would do if I were you. Penn State student, non-targeting. We have many kids land Wall Street IB jobs. Yep, that's awesome. Edward, hey man, I'm a mechanical engineer that just graduated. How can I switch into investment banking? Edward, if you're like just graduated and you don't have any relevant experience, to be honest, like not going to sugarcoat it, it's not going to be easy. It's going to be very tough. But like if you are really dead set on doing it, I mean, I don't know. There's a lot of variables. I'm gonna have to look at your resume to see like the specifics, right? Like where do you go to school? What's your GPA? What kind of relevant experience do you have, if any? If you're like a mechanical engineer who doesn't have any finance experience whatsoever, then typically like the first step we're going to have to do is like go out and find you like an internship that gives you some relevant finance experience as soon as possible, right? And so you might not be able to get like a full-time job right away because no one's going to hire someone for full-time that hasn't done any relevant internships in the past, and that has no relevant experience whatsoever, right? So you might have to like get 1 or 2 internships first and then look for your full-time offer while you're doing those internships. So you have to kind of like build it up step by step. And so we have had students that have done that before, but like it is tough. It's not going to be easy, especially because you're so late in the process. You already graduated. And also like you're most likely, even after you've done those internships and you try to recruit into banking, you're probably going to have to start at like a smaller bank, like a regional boutique bank, because all the big banks are done hiring at this point for your class. And they're also just not going to hire someone like that. Okay. So keep that in mind. But if that's something that you're interested in discovering more or exploring more, feel free to book a call with us and we can talk to you more about it to see if it's even viable. And if it is, like how we might be able to help you accomplish that. Okay. So again, you can go to www.wallstreetmastermind.com/apply. Okay. The street is abbreviated ST. stmastermind.com/apply. Okay. We got a couple of minutes left. Let me finish wrapping up like the last few questions here. Most effective way to answer the walk me through a DCF internship interview question. Like to walk through a DCF, you basically, like the way I like doing it is like first explain in like one or two high level sentences what a DCF is, right? So like a DCF, conceptually, a DCF is a valuation methodology where you value the business by taking all of its future cash flows and then you discount it back to its present value. And then you add that up and then that tells you how much the business should be worth today, right? And then so the way you would do that from a more technical standpoint is, and then you kind of go through like all the steps of the DCF. Like first you have to calculate free cash flow, right? So the way you calculate free cash flow, you start with EBIT, you tax affect it, you adjust it for changes in working capital, you add back depreciation and amortization, you subtract CapEx, so on and so forth, and you get that down to free cash flow. And then you also have to talk about like, okay, and then you have to calculate terminal value beyond the first 5 to 10 years. This is how you do that. You can either use the perpetuity growth method, or you can use the exit multiple method, right? And then you discount both the first 5 to 10 years worth of cash flows as well as the terminal value back to present value using a discount rate, which is going to be the WACC, or weighted average cost of capital. The way you calculate the WACC is you have the cost of capital for debt, it's cost of debt, and you have cost of equity, and then you look at the mix of your capital structure and you calculate the weighted average of those two things. And that gives you your overall discount rate. You discount that, you use that to discount back to present value, and then that gets you your valuation. Like something along those lines. Like that was kind of clunky, to be honest, because I'm just kind of like doing this off the cuff and I haven't done it in a while. But at a high level, again, it's just one to two sentence summary of what a DCF is conceptually. And then you go into like the more nitty gritty details. Okay. Does FMVA certification give you any kind of edge? No, it doesn't. In fact, I would say like there's almost no certifications out there that I've seen that actually gives you like a huge edge in recruiting. Like, does it hurt you? Probably not. Like, but it doesn't really move the needle all that much, if at all. And so like the way it actually hurts you is that you spend a lot of time being distracted trying to like get the certification, when really what you should have been doing is spending that time on all the other things that we talked about earlier in this call, like getting relevant internships on your resume, taking on leadership activities in school and relevant organizations, networking with bankers, prepping for your interviews, behaviorals and technicals, like, and keeping your grades up in school. Like those are the only things that matter, to be honest. Okay. So I wouldn't waste your time on like a bunch of useless certifications or whatever. All right. I do see one question here over on YouTube. Sorry, I've just been going through all the Instagram questions. So on YouTube, let me answer that real quick. Off the top of your head, any first-gen college student programs that come to mind? No, I don't remember which one it is, to be honest. So again, like you're gonna have to check. I want to say Goldman had one at one point, but again, yeah, you're gonna have to check. You're gonna have to check like each firm's diversity page to see if they have something like that. Okay, so but yeah, other than that, I apologize, but I don't remember the exact program off the top of my head, unfortunately. And like again, those are kind of the exceptions and not the rule. Like most firms do not have that, but I know there's like maybe a handful of firms that do. Okay, or maybe less than a handful. So I would try to look into that, or maybe do some Google searches. Some people might have talked about it online, and I just don't remember it. All right, so I think, if I'm not mistaken, we've cleared through all the questions. So if you have any last minute questions, feel free to drop them down in the comments. Otherwise, again, hopefully this was helpful to you guys. If you guys want more in-depth help, or you guys want like more customized and personalized feedback for your specific situation, or you want us like, help you one-on-one and get very hands-on and roll up our sleeves and get in the trenches with you and help you navigate your way through the entire recruiting process, then again, the first step to doing that is to go and book a call with us at www.wallstreetmastermind.com/apply. The street is abbreviated to ST. It's wallstmastermind.com/apply. And again, we've been around the longest. We have the most testimonials. We have the longest track record. We have the best client results. We have the most experienced coaches, including people who used to be the global head of recruiting at 3 different bulge bracket banks. Like, you will not get a better service or higher quality help anywhere else. Okay. And for those of you that are worried about your ability to afford our program, we also have financial aid options. So literally, you have no excuse, right? Like, no matter where you're at currently in the process, I can guarantee you that whatever outcome you think you might be able to get on your own, we will be able to help you raise not only your floor, but your ceiling as well. Okay. So if that's the difference between you not getting into banking at all to you being able to get into banking, obviously that would be a humongous win. But even if that just means you did get into banking on your own, but it wasn't your top choice bank, like maybe you only got into a middle market bank and we got you into a bulge bracket or elite boutique bank, or even you got into a lower tier bulge bracket or elite boutique bank and we got you into like a top 5 bank like a Goldman or Morgan or JP or Evercore or Centerview, like that is still a huge win because, like I said, your first job affects every single job that you're going to have for the rest of your career, and having a more prestigious firm that's higher paying, that has better exit opportunities, will increase your earnings for every single year for the next 20, 30, 40 years. Okay. So just think about that. It's very important, very consequential. Please prioritize it. And regardless of whether we get to work with you directly or not, I wish you the best in this recruiting process. It's very challenging, but I hope that you get everything you're looking for. And I hope this session has been helpful for you as well. We will be back with another session like this next month in October. So stay tuned for that. Otherwise, thank you guys for tuning in, and we'll talk to you guys next time. All right. Bye.